Hello everybody, welcome to another update on the stock screener. We have an update on Capstone mining as apparently people are concerned about the recent correction in Capstone mining. So what have we here? We have 5.5 at the top and we have actually gone down 20% from the top here. 5.5 to 4.5. So is this a concerning development? Yes or no? Let's go over the macroeconomics of copper first. So we have seen a little bit of a drop here from 4.7 to 4.5. That's not a lot. That's just less than 10%. So that's not a lot, while Capstone mining has gone down much more. So is this a buying opportunity? I think yes. Let's take a look at the insider trading. We have seen that we have a lot of sells for the whole year, of course, because the stock has been going up. So it's normal that people sell, and the latest sells were actually very big. We have a 3 million sell and 1 million sell in May. So that's from the CEO and another insider, senior officers. They're all selling, but that's normal because look at this stock has been going up so much, so they need to take profit. Just I wanted to say copper can still double to $9. We are still at 4.5 now, so we could still double because copper needs to go up by 50% to meet future demand. So in the long term, copper will still go up. It's no problem. So I have been updating my copper checklists. So now we have a checklist of about 17 points to help you decide if copper is in a bull market or a bear market. So please use this checklist. Just click on copper checklist here, and then you can see all these checkpoints. And let's go over them. So first we have the Killian Zhao Real Economy Index, which tracks the commodity markets. And they are derived from the bulk cargo shipping rates. So this is actually very correlated to the copper price. As you can see here, very correlated to the copper price. So make sure that this index is going up. So in March it was going up. We are now still waiting for the April number. And let's hope that this continues to go up. But we are still very early here. It has been going much higher in 2010. We are still somewhere around zero index here. So if this continues to go up, copper will go up. Then we have the copper gold ratio based on the 10-year yield. That's a bit weaker. You can see here that the 10-year yield has not been rising much. So that means that gold has been outperforming copper. So we need to watch if this 10-year yield will continue higher. But if you think that this 10-year yield will be stable, then it's good to hedge yourself against copper with some gold, because then gold will go up faster than copper. Then you have the LME warehouse levels, and you can see that this is also rising a bit. So that's a bit bearish, but typically we have ups and downs. So it could be that this goes up until here and then it goes down again. So need to watch this. Currently we are a bit bearish. Then we have China power consumption, which is still very high. So we will get some numbers again next month. Credit impulse is weakening a bit. I think it's going down a bit. So that could be negative for China GDP and also for copper. Then we have the Shanghai Composite Index, which is very correlated to the copper price. Let's take a look at the Shanghai Composite. And what's very interesting in this chart is that you can see a very long-term flag formation. So you can see rising lows and you can see these highs here. So this is a flag formation and this is about to break out above this trend line. So when this happens, it's very possible that this can double from 3,000 to 7,000. And that will, of course, be very positive for copper. I think the Shanghai Stock Exchange can break out here. So watch this. Very important because this is correlated to commodities and copper. GDP forecast in USA is actually not that good. It's going down, but it's still at 10% quarter-over-quarter GDP growth. So that's still okay. Supply and demand, here we have some problems. So we do have an electrification trend that is going higher, but we do not know how high this demand will go. But what we do know is that the mine supply is going higher. So we have first problem here, Glencore will restart operations of the Mutanda copper mine in Congo next year. So that's one problem. That's 100,000 tons that will come in. So we have here a deficit of 200,000. So probably next year this will go a bit higher with 100,000 tons. This is in 1,000 tons. So this chart would probably move up a bit next year. Then, well, there's also a possible strike, which is good for copper, but I don't think they will strike, so no problem here. Kamoa-Kakula, this is more important. This is Zijin and Ivanhoe mine, which will ramp up to 400,000 tons next year. And they're already starting to produce today. So they are ramping up with 400,000 tons next year. So that's why this thing is going to go up so high, because a lot of supply is coming in from Ivanhoe and Zijin. So watch out for this. A lot of mine supply is coming in. So we are talking about 500,000, which is half a million. But if you look at this chart here, 500,000 is just a little blip here, a little blip. So this could blip up a bit, the supply, but as long as the electrification trend, demand, this chart, demand, is going higher than the supply that's coming from the mines, then we still have a positive trend in copper. So everything depends on the demand. Demand side is more important right now. Seasonality, we are in June, so expect a little bit of a drop in copper, and then we will move back higher. So that's the seasonality. COT report was actually very positive. You can see that the shorters in copper are going away again. So up means that there are less shorters. So that's positive. COT report looks good. Australian dollar and Chinese yuan, you should always check those two. So the Australian dollar is actually still going up. As you can see here, we are still in an uptrend. Well, it has flattened a bit right now, but I think it's preparing to go higher. China is doing very well. As you can see here, this is the US dollar to the Chinese yuan, and it is going lower. So that means that the Chinese yuan is going higher. And China has actually been trying to buy US dollars to weaken the yuan, but it is not succeeding. So the yuan is still strengthening. So that tells me that copper and gold will probably go higher. Technicals, we are still in an uptrend. The uptrend has not been broken. So this could easily just do this, and then we will go higher. Crb Index, let's take a look at that. Crb Index is still going up. So I don't see any problem here. We are still in a breakout phase. Baltic Dry Index, take a look at the shipping rates. This is still data from last week. And we are still going higher. This thing is going higher. The yellow one is going higher. The red is flat. So no problems there. Yardeni, let's take a look if he has changed his forecast. Forecast is still the same, still going to 4,300 and next year 4,800. So the trend is still up, no problems there. We are still in inflation. Then we have the Brave Butter Skelly Index, which is actually a leading indicator for the economy. So you can see this red line here. It's leading. It's leading the weekly economic index, and as you can see, it has been going up a little bit. So that's also positive. Okay, so now I want to talk a bit about how high the copper price can go. Still think that the copper price will go up. So let's take a look at how copper supply and demand works. So we have two curves. We have the demand curve and we have the supply curve. So demand. Let's take a look at demand. So if the price goes down, this is the price on the y-axis. If the price goes down, then the quantity will go up, because if something is cheaper, then you will buy more of it. So that is this line here, that's the demand curve. Then on the supply side, if the price goes up, then the suppliers, the miners, will produce more. That's right. If copper goes up, then the miners will produce more copper. So that's why this goes up. And if you intersect these two lines, then you have the market price. So let's take a look at this supply side. These are the miners, and it looks like this. So here you have the cumulative quantity of production. This is the supply curve. And the demand curve I have I've drawn this myself, and this is the demand curve. So today we are at a price of $4.5 on copper, so somewhere here. So that's this demand here. And as you can see here, supply will be the same here. So the supply curve is very inelastic. Inelastic means that at every price, you cannot increase the supply that much anymore. There are just not that many copper mines out there. If you increase the price, they will still be producing at the same amount of copper, because there are not that many mines. So at a price of $4, we are actually very inelastic. If we were at the price of $2 or $1, then of course we have a very elastic supply. A lot of mines could come online, but now we are at 4.5, which means we are very inelastic. So the price of copper is now dependent almost entirely on the demand side. And the demand side is the electrification. The electric vehicles, the infrastructure, the charging stations. So everything depends on that demand. And that will increase the price or decrease the price. And I think that, of course, in the future, we will have more demand for copper. So I think that the copper price will shoot up very fast, exponentially, because there is no supply coming online. Except maybe next year, this supply curve could shift to the right. It could shift to the right because of those mines coming online from Zhejiang mining, and that could temporarily decrease the price along this demand curve, and that will bring the copper price down a bit. So I hope you know how to read these curves. As an example, this is for uranium. At uranium, we are at $30 now. So we are actually here. So we are not at a very inelastic supply here, because if the price goes up, a lot of these mines will come online. So uranium is here, copper is here. So there's a large difference between copper and uranium. Copper will be more exponential today than the uranium price. So keep that in mind. Then we already talked about this. There's a deficit, but we could go into surplus in 2023. So watch out for that. We're not there yet, but almost. We also knew that Chile has increased the tax rate on copper. So this is actually the tax rate. The blue line is the marginal tax rate. So if we go above $5, then it will be 75% tax rate added on top of the other tax here. So if you take the total tax, then we can go to about 50% tax. That's not very good, of course, for the copper mines, especially those that have high costs. But Capstone mining is actually low cost. So it's only at $2, less than $2 cost. So that should be okay. But of course, not a lot of mines will come online with this tax. And that will only increase the copper price even more. Less supply is higher price, if you understand this curve. Okay, so let's take a look at Capstone mining. What's the valuation today? So today we have seen a drop in the copper price, so it has gone down a bit. But when we take a look at the market cap today and an EBITDA of 5 multiple, then we see that Capstone mining is still undervalued at the current copper price. So I think we should be going to 2 billion and then to 2.5 billion by next year. So there's plenty of upside here. I think about 50% upside by next year, if the copper price, of course, stays at, what's the price right now? 4.5. So this is, of course, a must. We should stay at 4.5 copper for Capstone mining to go up by 50%. If this, of course, goes down to $4, for example, then Capstone mining will stay at this level, at 2 billion market cap. So let's hope that copper will not drop below 4, because that would be a problem. But of course, in the long term, when we look at 2024, then copper will eventually go to this point here, which is 6.5 billion. and that's triple from here. So if you're willing to hold Capstone mining for 2 years, 2 to 3 years, then we will certainly go much higher. So that's the little update for Capstone mining, and I'll see you in the next video.